All right, good evening, everybody. It is Tuesday, November 22nd, 2022. It is 8:55 p.m. Eastern Time here in New York City. We're reporting live from 59th Street, Columbus Circle. Right in the dead center of your screen, you will see these two towers here, which is now known as the Deutsche Bank Towers, formerly known as the Time Warner Center. It's a beautiful night. However, it is very, very windy in New York, so I do apologize in advance for any wind noise you do catch in the mic. Now, today was a big rally day on Wall Street. We had the S&P 500, the NASDAQ, and the Dow Jones Industrial Average up materially. Now, the S&P 500 was up about 1.36%, or about 53 points. And I think the interesting thing about the S&P is we have now regained that critical 4,000 level. Now, if you've ever read Reminiscences of a Stock Operator, based off of the legendary trader Jesse Livermore, he always looks to big whole round numbers in the market. Now, we are trading well above the 50-day moving average on the S&P, but right now the 200-day moving average, assuming we should rally to that level, that'll take the S&P to around 4,100. The Dow Jones Industrial Average, though, ticker symbol DJI, or the Dow 30, is leading this market, which is very interesting because at the beginning of all major, I shouldn't say all major bull markets, but bull markets as of late, right? In 2018, 2020, the market was really always led by the NASDAQ. But what I think is different about this environment, and we've been talking about this almost to the point of ad nauseum on the streams, is that this time it's a little bit different as it relates to conventional monetary policy, because we are in an environment of rising interest rates, okay? And yesterday we talked about the relationship on a relative basis between bond yields and equity asset prices, right? So generally speaking, as investors, we try to value the future cash flows of a particular business. And as interest rates go up, the future value of those cash flows go down as it relates to present value, right? So the present value of those cash flows are worth less as interest rates go up. So it's not that surprising that we're seeing the Dow 30 here lead both the S&P 500 and the NASDAQ. Now, the Dow bottomed here on October 12th, I think, and we have now rallied about 19%, trading at 34,098. Now, we'll take a quick look at the NASDAQ 100 futures, ticker symbol NQ. We are a little bit lower, so we are trading down about 25 points. But just from some perspective here, the NASDAQ 100 has only rallied about 10%. On tonight's live stream, I do actually want to shift our attention over to some hospitality stocks. So we are going to be talking about Hyatt. We're going to be talking about Marriott and some different trends we may see there. And we will also be covering some very critical and key home building ETFs, because as we know, the market is a forward-looking mechanism. And on Friday, we are going to be getting some key home statistics out, right? We are going to hear from the Census Bureau as they release the new home sales data. So we're going to talk about maybe some correlations there. And then we will end the stream. So before we get started, let's say hello to all of our friends in the chat. I see my friend Gregory is here, says good evening all. Vivian, welcome, says good evening everybody. Paul Greenwell, Andrea is here from Peru. Jeff is here, says good evening Tom. My good friend British Gray from Tampa, Florida, says good Tuesday evening, my friend Tom. Thank you so much. Ethan G is here, says hey Tom and everybody. Jonathan Richards, J. Dr. Longas, Rolando, Tone Rick, NNB045 says happy Thanksgiving Eve, Tom. Thank you, NNB045. Appreciate it. Chris Beeman, welcome. Lilla, Sally, Golden's Dawn, I appreciate you. Tom Berry, and Sparks Carnival. Dusty Cole, Abby 1. Let me put the phone down for a minute. I got to put my laptop away, and then we will get started. So allow me 1 minute here, everybody. Okay, I see everybody in the chat saying hopefully you're bundled up tonight. So here's the interesting thing about tonight. It's actually kind of warm out. I know, it's kind of crazy because the last 2 days in New York have been absolutely brutal in terms of the wind and the temperature. And it's actually about 10 degrees warmer tonight, if you can see up here. It is 44 degrees Fahrenheit, as it says right here at Columbus Circle. What I think we're going to do, everybody, let's actually make a U-turn. And let's check out Lincoln Center. I don't think we've been up to Lincoln Center in quite some time on the stream. I think it'd be kind of cool to see what's going on at Lincoln Center. Using people welcome says tonight is great. Indeed it is. I see my good friend FredX in the chat. Welcome, FredX. Always a pleasure. Really quick, again, apologize for the wind noise. The wind is pretty bad tonight. But tomorrow is a big day for our Canadian friends. So Team Canada will be playing Belgium in the World Cup, I think at 2 o'clock, right? Any of our Canadians maybe could confirm or deny that. I think Canada plays Belgium at 2 o'clock tomorrow, which I will be watching. There was a lot of good World Cup games today. You know, I could not believe that Argentina lost to Saudi Arabia. Can you guys believe that? Horrible game. I mean, it was a good game for Saudi Arabia, but I mean, Argentina just did not look well. Let's just say that. Now, usually when you give up goals early in the match and you try to climb back, Argentina had a lot of good chances, right? I think they outnumbered shots on goal. I think it was almost by like 10-1. Oh, wow. This used to be a Best Buy here, everybody. They closed down, I guess. This used to actually be a really, really busy Best Buy. Interesting. Anyway, yeah, I've been trying to watch some of the World Cup, but I just could not. I think that's the upset of the World Cup century right there. Argentina losing to Saudi Arabia. Crazy. Mike Skate TV, good to see you, my friend. Always appreciate you joining. Steamship TV says every stream today had been about the World Cup. Yeah. Julia's here. Good to see you, Julia. Welcome. Deborah says, I couldn't believe that either. Yeah, it's insane. Yeah, so tomorrow we're going to see Canada. 2 p.m. play Belgium. I'm excited about that. Supposedly Canada has a really good team this year, so I'll be rooting for the neighbors to the north. We'll see. Audrey is here, says, hey, Tom. Always a pleasure to see you. So something really interesting, everybody, that I've been noticing. Now, on these live streams, I would say over the last... I forgot to turn off my Twitter notifications. Hopefully it won't be too distracting. But on these live streams over the past couple of days, we've been really focusing in on the relationship, or I should say the divergence here between the XLE, which is the Spiders ETF that tracks the energy sector, and crude oil. Okay. Now, for full disclosure, I am long XLE, just because the follow-through day that we had 2 weeks ago is still intact. And I do have long exposure there, but I am keeping my stops very, very tight. But what I like to look for is the individual stocks. And here's Lincoln Center, by the way. We're about to walk over to it. But I think it's very important to check up on the health of the individual stocks that make up that ETF. Okay. So you have ExxonMobil today, and you could just go across the board of all the individual stocks that make up the XLE. And they've been performing very, very well. And we sort of talked about it, an old saying that was coined by legendary trader Paul Tudor Jones. And he would always say that losers average losers, and you should never double down on your losers. And it seems as if a lot of these oil and gas stocks, energy stocks, are trading near 52-week highs, right? They have all of the specific metrics that we look for when trying to formulate an investment thesis, right? Fantastic earnings growth, fantastic free cash flow, revenue growth. But where I'm a little bit nervous is that commodities tend to be very, very cyclical in nature. All right. So I think even though that a lot of these oil companies are trading near 52-week highs, all of them are above their respective 50-day and 200-day moving averages, which is fantastic. I think if you're long this stuff, you just need to watch it and deploy very, very, I would say, aggressive risk management procedures. But it seems as if the XLE and energy is where it's at. Now, what I did want to talk about, sort of shifting the conversation from energy, is hospitality. Now, if you just Google, right, all of the specific hotel stocks, I would say, you could think of Hyatt hotels, right, Hilton and the like. These are all acting very well in addition to energy, right? And it's important when you're looking at the broader market is to decipher the sectors within that market that are performing well, and the hotel stocks are performing very well. Elaine Official is here. Welcome. Good to see you. Let's cross here a minute. I'm so glad we came up to Lincoln Center. We haven't been here, I think, like a month, right? Anybody remember the last time we went to Lincoln Center on the stream? Now, the most memorable time on the live stream that we've been to Lincoln Center was when they were doing the outdoor silent disco. Does anybody remember that? That was insane. They had a massive, I think it was in the summer too. They had a massive disco ball, sort of like a dance floor here. I think it was one of the largest in the world. And they had a huge event where it was like an outdoor disco. Sean is here. Welcome, my friend. Good to see you. Destructionist says, yeah, I remember that was awesome. Billy says, I watched the FTX court hearing today. It was kind of interesting. Yeah, I mean, so I think I've just been so inundated with the FTX news that I've just decided to mute all of the keywords. So I'm totally out of the loop on that. Sabrina Ferris here says, good evening, welcome. Yeah, we definitely crashed the party with the financial talk that day, for sure. Jay Victor is here, welcome. Sparks Carnival says, I can no longer be a China bull. Their zero COVID policy is sloppy. Yeah, I mean, that's mainly one of the biggest critiques and criticisms, right, for investing into China specifically. You know, not only that, but there's been an ongoing battle between the SEC and Chinese companies to comply with the Securities and Exchange Commission as it relates to financial reporting. Now, on the stream, we've talked about specific stocks, or I should say ADRs, that were delisted and now trade OTC or over the counter. I think the most notable one is probably Luckin Coffee, ticker symbol LK. Now, Luckin Coffee is actually a successful business. It is a real business, coffee chain in China, but as they were trading in the US markets, this was about, 2019, I think? They were cooking the books to the tune of, I think, $300 million. So they were since delisted, but they do trade OTC or over the counter. I think Baidu, did Baidu report today or did they report tomorrow? I was so busy today I couldn't even keep track, but I think if there was one Chinese company or ADR that we should be following very, very closely. It's a lot of those ones that have been beaten down, right? Like Baidu, you could think about Alibaba, Pinduoduo, and the like. But yeah, I think those are the main two concerns, right? And it seems like the Chinese conversation is very polarized, especially if you watch the mainstream financial channels. You'll have, one analyst come on and say China is quote unquote uninvestable. And then you'll have others saying, you should pile in here because valuations are so compressed and detached from reality. And to Sparks Carnival's point, I think it's very, very difficult to operate a business in a zero COVID policy environment. Now, this isn't just for Chinese companies, by the way. I mean, we've heard from the CEO of Apple, Tim Cook. They've announced that they are going to be ripping a lot of their production away from China and actually bring it back stateside here and also move it to other parts of the world like India and the like. And this is a broader trend here that I think COVID exposed, that we need to start domesticating the supply chain. Hey, touring different places is here. Good to see you. Thanks for joining. Patrick, New York, always a pleasure. Thank you. Con I Am says, wow, American companies never cook their books. That's actually not true. I'll give you some homework. I would say one of the biggest, well, I won't explain it. I'll just let you guys do the research. But check out Waste Management. I'm sure some of you guys would be familiar with that whole fiasco back in the day. It was mainly a depreciation scandal. Hello, May 2008 says, hey, Tom, how are you? I'm doing good. I'm happy that it's not as freezing as it was the last couple nights. It's a good night. City's not as crazy today. It's a beautiful night, although a little bit windy, but it is 44 degrees. I think it was almost 20 when we were doing our live stream last night. So that's good. Now, this is a restaurant here on this side of Lincoln Center. I've never been to it, but it looks really unique. And then during the summer and the spring, on top of the restaurant, overlooking Juilliard, one of the most famous music schools in New York City, is actually sort of like an open area where you can come, sit, read, hang out. Let's see if it's open. I doubt it. During the winter, it's probably closed. Chris Beeman, welcome. Audrey says, yay, Juilliard, it's a fantastic school. Fantastic school. Sean says, yeah, that CEO faced 11 years in prison for defrauding investors. Yep. I think that sentencing was last week? Now, I think the same thing is probably going to happen with Sam Bankman-Fried for defrauding investors as well. I mean, I know we've talked about this ad nauseum. I really don't want to spend too much time on it, but I don't understand how these people could physically do that, right? Number one, it's going to come crashing down at one point in time. This is the New York Public Library. I just want to quickly show you guys. I spent a lot of time during my college years here studying. Really, really nice library. But anyway, I don't know how somebody could just possibly do that. Actually take client funds and use those client deposits to buy homes. Sam Bankman-Fried's parents now are on record using client funds to purchase properties and homes. I just don't understand how you could have I guess the best way to describe it is sociopathic tendencies, right? Now, I would say this, and here's the last thing I'll say about it. So when I went to school at John Jay College of Criminal Justice, and obviously in its name, it is a very heavy criminal justice focused school. So many of the students go on to be in the FBI, CIA, as well as NYPD and other law enforcement. So I took some interesting classes, and one of which was this psychology class, but it was all tactics and techniques for interrogation. And when the whole FTX thing blew up, right, I really wasn't following it because you guys know how I feel about any crypto exchange that has an altcoin attached to it. I just kind of tune it out because, I think it's a scam, which this one turned out to be a scam, by the way. Hold that thought. Check this. Check out how beautiful this is. My God. This is the Central Park Tower, 220 Central Park South with the gold top. And those two towers to the right of your screen is now the Deutsche Bank Towers, formerly known as the Time Warner Center. So anyway, I took a course. It was like a psychology class, but with specific, we went back through some of the most hardened criminals in history and studied their tendencies, right? And so when the whole FTX thing blew up, there was all of these interviews circulating on Twitter with Sam Bankman-Fried and the other one. She's a girl, I forget her name. And I was watching the video for 2 seconds. Well, not literally 2 seconds, but a couple minutes. And I thought it gave me flashbacks of my college days in this interrogation course studying sociopathic tendencies. And if I was, let's say if I worked in one of these big VC firms that got duped by this guy, I would have been like, guys, this is like textbook sociopathic tendencies. Just the different speech patterns. You could tell very easily if you're trained to search for this stuff. Body language is big. Also speech patterns and speech tendencies. The way you react when you're talking about other people, right? Sociopaths tend to be very unresponsive when talking about others, right? It's very strange. And Sam Bankman-Fried and the other one, I forget her name, that was the CEO of Alameda Research. It is like obvious textbook sociopathic tendencies. Anyway, that's all we'll say about the FTX. Prodmans, I saw your live last night and it was awesome. Thank you so much. I appreciate you joining back again tonight. We are here at the beautiful Lincoln Center. And this is one of the most famous shows here. This is called the Nutcracker. It is going to be here at Lincoln Center for the holidays. And this is the Lincoln Center fountain, very famous. And unfortunately, now that it's getting to be winter time, this will no longer be in operation, I think, after Thanksgiving. Hey, William Brooklyn is here. Good to see you, my friend. Thank you for joining tonight. Appreciate it. Wendy England is easy to spot. The Nutters, after the fact, everyone was jumping on this bandwagon. Yeah, and the interesting thing is, and maybe I tend to be a little bit too overboard with this, and I tend to say it a lot on the stream. Like, I will completely, if I suspect something is nefarious or not right, or it's going to waste my time, I'll actually just mute all of those keywords from the internet. So my computer is actually programmed not to show me this stuff. So I won't even see it, right? Like, I've muted a lot of, like GameStop, like Dan Zhang. Thank you, Dan Zhang, for bringing this up. Dan Zhang is one of our great moderators. And he actually said, look, Carl Icahn has a big short position on GameStop. I didn't even see it because I muted the keywords. So anyway. Yeah, the Elizabeth Holmes things too. I think she got sentenced already over 10 years in prison. Dr. Longas, welcome. Yeah, exactly. Dr. Longas says, I was just looking up different sociopathic tendencies. It's really interesting how, psychology plays into all this stuff as it relates to police work and all that stuff. Malcolm says, you're taking my job, Tom. I'm a psychologist in the UK, criminal justice system, work with sociopaths and psychopaths all day. Yeah, so maybe you can provide some clarity here. Like, am I on the right track, right? Because I studied this. I took one class. I'm not going to say I'm an expert. But when you notice those specific patterns, like alarm bells should go off in your head. And it's really just, it's not necessarily just total disrespect and disregard for others. It's the emotion that you show when you're talking about other people. It's almost like it doesn't affect you. It's quite strange. Hey, Gary Carpenter, good to see you. So tonight, everybody, let's head down. Let's start to head downtown because it seems like every night we say we're going to go to the Hudson Yards, and then we reach the 2-hour mark on the stream right as we're about to get there. Audra says, I have a BA in sociology and an MBA in finance. Yes, go with the alarms. Yeah, so all crazy stuff, all crazy stuff. So real quick, tomorrow, everybody, is Wednesday, right? Tomorrow is Wednesday, and tomorrow is when we are going to be hearing from the Federal Reserve as they release their minutes from the last FOMC meeting. Really quick, you see these sort of outdoor structures here? This is where they will be selling the holiday trees or the Christmas trees. And it seems as if we'll probably see them maybe tomorrow or the next day, but all the Christmas trees wreaths are laid up all along the road here down Broadway. It's going to look pretty cool. So we're going to hear from the Fed minutes, but here's my take on it. Okay. I think the Fed has done a good enough job of telegraphing where monetary policy is headed that I don't think it's going to be that much of a catalyst for tomorrow specifically. But we will be covering it and we will be going over it. And on Monday, let me give you one quick shot of the Trump International Hotel and Tower here. Another great building next to 15 Central Park West, which is another very, very famous building here, Central Park West, Columbus Circle. I think it was home to the likes of Derek Jeter, Alex Rodriguez at one point, and the former CEO of Goldman Sachs, Lloyd Blankenfein. And I think he actually may still have his unit there. Not too sure. Anyway, so Monday, we heard from a Federal Reserve president, San Francisco Fed President Mary Daly. Now, before I reveal what she said, I want to provide you with some historical context in relation to specific Fed presidents. Now, there are some Federal Reserve presidents that are historically known to be very hawkish, and other Federal Reserve presidents that are known to be very dovish. And for those of you who don't know, when a Federal Reserve president is hawkish, that means they tend to favor or lean on the side of very tight monetary policy, which would mean they're in favor of increasing interest rates and letting assets roll off the balance sheet. And if a Fed Reserve president or a Federal Reserve president is deemed to be dovish, that would mean that they tend to lean on the side of favoring a very lackadaisical monetary policy, or QE, which you would call quantitative easing. So Mary Daly came out here and she said that she still believes that the Fed funds rate should top out right around 5% in mid-2023. So let's just call it Q2, right? We'll call it Q2. Now, we need to understand where we are currently. And currently the Fed funds rate is right in the range of 3.75% to 4%. So if we think about the rate hike that we may get in December, so the next FOMC meeting is December 13th through the 14th. If we get a 50 basis point rate hike, which according to the futures market, if you look at the futures market, it is about an 80% certainty that the Federal Reserve will raise interest rates 50 basis points. So according to Mary Daly, she only sees 2 rate hikes left and then we're done. I'm really not sure that that's going to be the case, but if you look at like the TIPS market, which are the inflation protected securities of the bonds, the bond market is sort of signaling that this inflationary event is going to be a thing of the past. I don't know. It should be interesting. Yeah, Sparks Carnival says, what recession? I have very high hopes for December. FredX, good to see you. God bless you, my friend. Dwayne says, what is your thoughts on an impending recession in North America? So I'm actually in the boat where we are in a recession, right? A technical recession, be it that. Because we've had 2 consecutive quarters of GDP contraction. But here's where I think I differ from, I want to say, the vast majority, maybe I should call them pundits, like talking heads on the TV, and just people in general. I think the term recession, especially as of late, has been very, very politicized. Would we agree on that? Do you think we would agree on that? And here's what I mean. It's very obvious, right? Very, very obvious that people who tend to be a little bit left-leaning would say, oh, no, it's not a recession, no big deal. And people that would be leaning right would say, yes, it is a recession, and it's all Joe Biden's fault. And they just sort of make it a politicized event. I tend not to do that. And full disclosure, I do tend to lean a little bit to the right. But I've said publicly before on this live stream that for those who really understand the financial markets and credit cycles in general, presidents, right, or administrations tend to get too much credit when stock markets are doing well, and tend to get too much of the blame when equity indices and stock markets are doing poorly. And here's what I mean by that. If you understand a credit cycle and the bond market and just broader monetary policy in general, the president has nothing to do with that. And monetary policy, especially over the last 14 years, have been one of the main drivers of, I would say, stock market returns and valuations in general, right? So the Federal Reserve is a separate entity that does not collude with the administration and the president. It is a private sector institution that raises interest rates, lowers interest rates, and expands and contracts their balance sheet based upon if they want the economic cycle to run hot or continue to progress, or if they want to contract the economy. And it just so happened that under President Barack Obama, when we really started to emerge from the great financial crisis, you need to understand what sort of monetary event we were in, right? The Federal Reserve started to lower interest rates. They started to expand the balance sheet by buying U.S. Treasuries and mortgage-backed securities. And they pretty much did that all throughout the Trump administration as well, especially during COVID, right? When we've essentially dropped the benchmark rate, which is the Fed funds rate, to near zero, and went on a bond buying binge. But what is the type of monetary environment we are in right now? Well, we have just come off 4 consecutive interest rate increases to the tune of about 75 basis points each, which is the most aggressive interest rate increase, I would say, environment we've been in since 1994. So there's no wonder why equity valuations have been getting hurt or declining, because we are in a credit tightening cycle. Does that make sense? So in my view, and again, I'm not saying I'm right, I'm not saying I'm wrong, I'm just giving you my viewpoint. I think presidents tend to get too much credit when stock markets are doing good, and I think they tend to take too much blame when stock markets tend to be taking a hit, because it's really all predicated based on monetary policy, in my view. XRP is here. Good to see you. Welcome. Alexandria, good to see you. Malcolm says, if you want to see a recession, move to the UK. Inflation is higher than reported for sure, much higher than the 11%, and it's so expensive. Yeah, so Malcolm brings up a good point. Let me cross the street here. Now, we got the UK CPI numbers out, I think it was about 2 weeks ago, was it not? And I believe we got an 11% CPI print in the UK, which is really just totally unacceptable, by the way. So if we want to understand, even zooming out on a bigger macro picture, right? I think many market analysts and portfolio managers tend to focus on monetary policy here in the US by talking about the Federal Reserve, but there's global central banks, right? You can have the ECB, you could have the Bank of England, right? There's global central banks, and with very, very few exceptions, right? Except the Bank of Japan and maybe in Turkey, everybody is in a massive quantitative tightening cycle. But for some reason, Bank of Japan is still doing QE, which is wild, but we could talk about that another day. Edward Adams is here. This is Hudson Yards. Tom, good to see you, Edward Adams. Welcome. Yeah, Julie M says there is the rest of the world. Indeed. Yeah, let's try to stay steadfast. I'm going to try to get you guys down to the Hudson Yards as fast as possible. So maybe tonight we'll avoid all the tourist trap stuff. Hey, San Miguel is here. Good to see you. Audrey says, yes, Tom, I agree. Have ever thought of doing adjunct teaching in finance? You break it down very well. I never really thought about it, no. But I think if you want to be a professor or a teacher in a college, I think you need all these advanced degrees, and I don't have any of that stuff, and I don't have the time to go get it. But guys, check this out. This is 57th Street, Billionaires Row, right here in New York City. Beautiful view of 432 Park Avenue. Now, what I think I'm going to do is actually cross the street, hopefully safely, and I want to show you guys a really unique view of Central Park Tower while we're standing directly under it, just so you can get the full perspective of just how tall this building really is. It's wild. Hey, Tiago Pereira, good to see you. Welcome. Thanks so much. You know what I was thinking about? Okay, quick segue. Sorry to get too distracted. I may do a Canadian national team watch party tomorrow. So I may be live streaming the Canada game with some commentary. But I don't want to get the channel taken down because usually the World Cup is really strict on that stuff. So this is the front entrance, everybody, of Central Park Tower, one of the newest additions to Billionaires Row, and it's a breathtaking building. So check this out. Just look at how tall it is. Isn't that amazing? And just for some perspective, you see this little glowing yellow top right here? That's the top of 220 Central Park South, which is also an incredibly tall building. And Central Park Tower dwarfs over in the entire Billionaires Row. It's insane. Now, fun fact about the building, I think I've said it before, but we do have a lot of new people. There's a triplex at the very, very top of the building. And a very famous real estate broker by the name of Ryan Serhant. I think he's one of the most successful real estate brokers, maybe in the world, especially here in the United States. Anyway, his company is in charge of selling the triplex that is now listed for $250 million. So $250 million. Kind of crazy. Gary says, who is everybody rooting for in the game? I'm going to go Team Canada. I'm excited. Yeah, Laney James says if you mute the commercials, you should be okay. We'll see. Smee Media says, what time is the Canada game? So kickoff is at 2 p.m. And they play Belgium, which is a really, really strong side, by the way. But look, I mean, we have a lot of Canadian viewers, and Canada is very close to the U.S., so I got to take Canada's side here. It should be a good game. And look, you never know. You never know who's going to win, because today Argentina played Saudi Arabia, and they lost, if you could believe that. I was in and out of that game a little bit. I was just so busy at work today. But, I mean, you have one of the greatest soccer players in the world on Team Argentina, and Leo Messi, and they couldn't get it done. Saudi Arabia won. Kind of insane. All right, so we are now outside of the beautiful Carnegie Hall. And yes, there is all scaffolding covering the entire building, which is a little bit of a bummer. But it looks good nonetheless. Using People says, Tom, what is your opinion on Lex Friedman? I really like him. I listen to his podcast all the time. And then this is 157, which is another iconic building here on Billionaires Row, which I think is home to the likes of Michael Dell. And I think Dell Technologies reported earnings yesterday. You know what was a company that reported today? I didn't get to check in on the report. I think HP reported earnings today. Could anybody maybe in real time here let us know what the results of that? I think HP did report, and I think the CEO of HP was actually on Mad Money with Jim Cramer. I was just too busy today. I couldn't watch it. Smee Media says, Thanksgiving joke. What was the turkey suspected of? I don't know. What was it suspected of? Sparks Carmen was like Dell was up, but HP. But what was like the outlook? What was the forward guidance? Because, yeah, maybe I'll have to go and look. Foul play. Interesting. You know, it looks like there's an event going on right outside the Carnegie Hall. Maybe it's just getting out here too. But anyway, I think that concludes our talk on the Fed, right, on the Federal Reserve. We're going to hear from Fed President Mary Daly tomorrow. I mean, we're going to hear from the Federal Reserve tomorrow for the FOMC minutes. But we heard from Mary Daly on Monday. She said she thinks the Fed funds rate is going to top out at 5%. I don't know. I'm not too sure. I don't think... I don't see that, because that would imply only 2 more rate hikes and then everything is done. So I think we're going to go materially higher from here. Hey, Dan Zhang says, Tom, are you going to watch Germany versus Japan tomorrow? That will be a great match. Japan will put on a crazy fight. I'm going to try to watch as many as I can. I tried to get as much work done as possible today, so I can watch the World Cup tomorrow. But, I mean, you never know. Tomorrow is supposedly going to be the busiest, or I should say the second busiest travel day of the year, obviously before Thanksgiving. So hopefully a lot of my clients will be out of the office. We'll see. One stock I wanted to talk about, everybody, Hyatt, or Hyatt Hotels. Speaking of Hyatt Hotels, good segue. This is the Park Hyatt here at 157, all right? So this store is where you have the residences at 157, where these apartments are ultra luxury right here on Billionaires Row. You have a very interesting and beautiful impromptu art gallery outside. But if we keep walking down to the second door, it'll bring you to the Park Hyatt, which is one of the greatest 5-star hotels in New York City, and one of the newest, by the way. And I know we've been talking about the relationship specifically between the XLE and crude oil. We've been watching that. But I also want to spend a couple minutes tonight talking about the hotel stocks and hospitality in general. And this goes all the way back. Here, I'll turn around and give you guys one more view. And this sort of goes all the way back to a lot of the consumer spending numbers that we've been getting out. And one of the things that we've been noticing from these consumer spending numbers is consumers are not necessarily spending less. What they're doing is they're just shifting their spending habits, right? And we heard this when a lot of the major investment banks started to report, right? A lot of the credit card issuers started to report. We have now shifted from buying durable goods to more experiences, right? Traveling, staying in hotels, cruises, things like that. And it's no surprise if you look at a stock like Hyatt Hotels, right? Ticker symbol H, trading near its 52-week high, also trading near its all-time high. I think we closed at 97.05 today. Now, again, when we talk about this is not advice to go buy these things. It is not an advice to sell these things. What this live stream does is try to give a broad perspective on the market from a top-down, bottom-up level and just have a conversation. So if you look at Hyatt Hotels, also Hilton Hotels, ticker symbol HLT, that is also trading near 52-week highs, but lagging Hyatt Hotels. And the reason why I picked out those two companies in particular is because they tend to cater towards a very different demographic. So what do I mean by that? Well, chances are if you've ever stayed at a Hyatt hotel or a Hilton hotel, it tends to be more on the upper echelon, right? Or I would say the top bucket of hotels. So very, very expensive. So for example, the Park Hyatt Hotel that we just walked past, generally speaking, I would say the lowest price room is probably around $800, going all the way up to, into the thousands for a room. Maybe it'd be interesting if somebody in the chat could look up what the going rate, assuming you wanted to stay at the Park Hyatt tonight. I'm gonna guess $900. So it seems as if we have this discrepancy, and we've been talking about this gap for some time now on the live stream, where the luxury market is actually doing quite well. Now, how do we know this? Well, we can use stocks as a leading indicator into the health of consumers that sit in different ladders, I should say, or rungs of socioeconomic status. So I would say an example that I would bring up is if we think about 3 weeks ago now, I can't believe it's been 3 weeks, when we reviewed in detail the earnings report of LVMH, right? LVMH Moet Hennessy. They had a record-breaking quarter. We also heard from Hermes, where, and I think we heard from somebody else. I forget, there was so many. But the luxury market is doing well, right? The health of the luxury market is doing well, and they're actually forecasting that they're going to raise prices across the board in increments of either 5 to 10% because demand is just so strong. And the reason why I wanted to bring this up is because there's so much talk of recession. There's so much talk of, economic turmoil and decline. But again, if we rewind this live stream, maybe about 20 minutes ago, I went on a tangent or a tirade about monetary policy. And for 14 years, the Federal Reserve has been manipulating the market by suppressing rates, right? Suppressing yields and expanding the balance sheet. And there's two main things that drive the market, right? Number one is earnings growth, right? So if we could forecast GDP growth, 9 times out of 10, if GDP is expanding, equity prices are going to go up. But number two is liquidity, right? When there's ample liquidity in the system, you have asset valuations appreciating. So over the last 14 years, anybody who had exposure or owned assets did very, very well. Well, the problem is, if you look at the breakdown of who owns the majority of assets in America, it's the top 5%, okay? Very seldom do you see working class people in comparison, right? So on a relative basis, working class and lower class people having access to these assets. So you had home prices inflated, you had stock markets and equity valuations inflate like crazy. And we've seen this very lopsided recovery, right? Even going back to the great financial crisis, huge lopsided recovery. And I think that's why you're seeing specifically stocks in the luxury market or companies that cater to luxury goods and services do very well, such as Hyatt, Hilton, and the like. Wow, check out this up close and personal view of these candy canes here. I think we saw them last night on the stream too. Hey, Matt M is here. It says, hey, love your stream. Thank you. Thank you, Matt M. Hopefully you're enjoying the sights and sounds in New York. But if you guys sort of like the talk track and the conversations we have on these live streams, if you scan the QR code on your screen and punch in your email, I write a free investing newsletter for the group, right, where we cover these topics: U.S. equity markets, emerging markets, fixed income, real estate. So if you punch in your email, you will be signed up to receive it absolutely free. So go ahead and do that. Ali Star says, one king room. Wow, is it $1,898 Wednesday through Thursday this week? That's insane. That's insane. Think about that. That's somebody's rent per month for one night. Wild. $2,000 a night for a room. It's insane. Wow, Malcolm says they've increased by 10% recently. Oh, those specific bags, I think. Sparks Carnival says, Tom, I think high-end consumer spending is starting to show some cracks, though. Williams Sonoma. Yeah, I saw that too. Estee Lauder as well. It's a good point. I think you may be right, but I think maybe that would go back to the what are they starting to spend on, right? And people want to travel, people want to go out, and let's say if we do go into recession, right? And I want to sort of keep this neutral, so I want to pull my personal opinions out of it. So let's just go with the narrative opinion, right? So the narrative opinion right now is we're not in a recession, but there is a probability that we may go in one, right? Which would mean it would be a hard landing as opposed to a soft landing. Really quick though, one of my really, really good friends that runs a very successful hedge fund out of Chicago, I was talking to him the other day, a very, very well-respected individual in the business world that is the CEO of a big manufacturing company. I can't disclose what it is, but he is very, very strong-hearted in his opinion that we're going to have a soft landing. So that's all I could say about that. But for a second, let's assume that we're not in a recession and we go into a recession. I think the saving grace is going to be companies that are sort of recession-proof in a way. And so what I mean by that is maybe your Walmarts of the world, right? I think Walmart is another stock trading near its 52-week high too, right? I don't know. Could anybody look where Walmart is trading at right now? I think it is near its 52-week high. Anyway, and we actually have to make a right because we got to get down to the Hudson Yards. I think those are the type of stocks that may perform better. Is travel geared towards luxury, like the hotels, Hyatt, maybe Hilton, and basic Walmart. You still got to go to Walmart and get basic foods and necessities, even if we are in a recession. Laney James is, I like a nice Marriott Courtyard. Yeah, they're nice hotels for sure. Noodles says 150, 169 Walmart. Sally is here. Welcome, Sally. Zoom out a bit. All right, let's continue to head down. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and hit the subscribe button if you're new. We do these streams about 5 days a week between New York City and Miami. We'd love to have you guys here. Little guy Jerry is here. Good to see you. Thanks so much. Hopefully you're having a good day so far. As we are passing the Trump Tower, I'll try to give you guys a peek inside the lobby. Very unique place here. Noodles says, any Thanksgiving plans? Not really. I think I'm just gonna hang around home, hang out with the family, hang around New York. What about you? Any big plans? Grand Street One says Saks Fifth Avenue Holiday Light Show premiered tonight with Elton John. Wow. That must have been amazing. Was he actually there? That's really cool. Blues Rider says, if you missed the train, a room at the Equinox Hudson Yards is only $895 plus tax. Oh my God, man. That's nuts. That's nuts. $895 for one night. Hey, Hemi Powers here. What's up? Noodles says, Tom, we're hosting on Long Island, 20 people, including the 5 of us. Awesome. Love to hear that. Derek Dulce says, hey, Tom. Good to see you. Yeah, I mean, I still stand by my prediction that I think this year on Thanksgiving, well, I should say the Thanksgiving week, starting tomorrow and going through the weekend, is probably going to be the most traveled Thanksgiving of all time. We'll see if I'm right. I'm sure there's going to be data and statistics about that. Because everybody in my immediate circle, right, between coworkers, clients, people I know, everybody seems to be either traveling somewhere, hosting a big dinner party, and for obvious reasons, which we won't go into tonight, couldn't really do that the past 2 years, unfortunately. Malcolm says, Tom, what's the story with Ticketmaster and Taylor Swift? Any ideas? I honestly, to be completely honest, I have zero idea. Zero idea. I saw something on my Twitter feed about it, and I don't want to sound too negative. I think I always sound too negative sometimes. I saw something about it. People were complaining, and I clicked on, it got me, it like clickbaited me. So I clicked on it, and then I read 3 of the comments on like the thread of people complaining about Ticketmaster and Taylor Swift. And the conversation was so mind-numbing that I just couldn't take it. And so I muted all the keywords. So I don't know. Some people are saying it's a monopoly, and then I just couldn't, I don't know. But that was my story with it. Hey, Andrew Calhoun, what's up, my friend? Says, hey, Tom, I caught you live. Fantastic. Sorry, mate, I've been busy. So, Andrew, did you watch Australia play in the World Cup today? You know, I think they actually took the lead at first, right? Didn't they? I think Australia scored in the 8th minute. They were up 1-0, but I think they went on to lose, what was it, 4-1 maybe? Whoa, that's crazy. So Vivian says Ticketmaster ran out of tickets. Heard tickets were going for 34 grand. Yeah, that's ridiculous. I mean, look, if somebody wants to pay that, I guess, but Dr. Long is yeah, I had the same reaction. Yeah, there's only so much news flow that you could pay attention to, right? And over the past year, I've been better with auditing my time. And there's so much news flow that's being thrown at you that you can really waste a lot of your time. So okay, so Fairway makes a very good point. So listen to what Fairway has to say. He says, Tom, those hotel prices could be why credit card debt has been increasing at a 20-year high. Yeah, I mean, so here's an interesting, it's a good point actually. As we come up to the Cartier building, and it looks like we're about to see the Saks Fifth Avenue light show as well. So the Federal Reserve did come out and say that credit card debt, right, hit an all-time record high. Is that correct? Or was that household debt? Does anybody know? Sometimes you guys got to help me out here, as sometimes my brain goes to mush after too much work. I think it may have been household debt in general, right? But here's where I'm a bit concerned, because credit cards are very, very rate sensitive instruments. And as the Federal Reserve has been raising interest rates, well, I would check your interest rate on your credit card, because chances are, if you carry a balance on your credit card, your interest rate probably went up, right? And as rates go up, Tesla right here. We got to talk about Tesla too tonight. I really like that Tesla though. And the problem is, as interest rates go up, the interest rates on your credit cards are going to go up. And here's the thing that really, really stinks. Credit cards tend to be very, well, number one, they're classified as bad debt. Credit cards are bad debt generally, especially if you carry a balance on them. But they tend to be very, very high interest rates. Very, very high interest rates. Austin City Limits. Good to see you, Austin. These things are really interesting here. So I want to mention Tesla really, really quick, because back in October, I posted something on my Twitter feed. And if you guys want to see it, if you want to follow me on Twitter at Walks Wall Street. Now, Tesla stock, the stock of Tesla, looked to have been carving out one of the most egregious head and shoulders tops I have ever seen in my life. And this all corroborated with the fact that Tesla is undergoing some margin compression. Right? So if you think about all of the main analysts on Wall Street, if you've ever read like an analyst report on Tesla, what is the main, I would say, bull thesis that these analysts claim for Tesla? Does anybody know what it is? It's the very, very high gross margins comparative to the industry, right? I mean, obviously, that's the main one. So if you think about the gross margins at GM, Ford, all the major autos, maybe mid-single digits, maybe. But what was really unique about Tesla, and that is why if you're building your financial model and you're saying, look, if Tesla could have 30% gross margins and really get the gigafactories ramping and production ripping, right, firing on all cylinders, well, then that's money right there. However, if you've noticed, and we've been covering Tesla's earnings report ever since we started doing this live stream, the number one thing that I said to look for is that margin compression, because that was the key to the bull argument. And margin has been compressing, right? Due to a couple factors. So this is East 50th Street, Saks Fifth Avenue. I think we actually may see some of the lights show at least. Now, margin has been compressing obviously due to inflationary pressures, supply chain mishaps, and I think we're now under a 30% gross margin on Tesla. So if you go to my Twitter page, Walks Wall Street, I said, look, this thing is probably going to decline rather rapidly here. And it seems as if we have entered the stage 4 decline phase. And I think year to date, or let's just say from all-time record high, Tesla is down about 60%. So the technicals on top of the fundamentals seem to be deteriorating a little bit here. Oh, check this out. Look at that thing. Fairways is how much of Tesla's profit was selling tax credits? Quite a bit. Hey, Penelope is joining us. Good to see you, Penelope. How are you? From Tennessee. NYCI is here. Good to see you. Blues Rider says, do you get a free blue check if you buy a Tesla? Oh my God. You get 2 of them. You get double blue checks if you buy a Tesla. All right, what are we thinking about the windows at Saks Fifth Avenue here? I think they're pretty good. Maybe not better than Macy's, but they're pretty good. Not bad. Hey, Ryan Iglesias, thank you so much for the 10 CAD. Thank you so much for the donation. It says, hey Tom, thank you for all you do and overall education on Wall Street stuff. Toronto needs a Tom or TNC, Tom News Channel. Thank you so much, Ryan, for the support. And Ryan, also, good luck tomorrow. We got the Canadians playing Belgium. So good luck to our neighbors to the north. Team Canada tomorrow, 2 p.m. Make sure you tune in. Big World Cup game. I think there may be a big upset. Belgium is... Oh, is that true, San Miguel? So, oh yeah, Spain and Brazil. Yeah. You know what was a good game? Yeah, we got to continue to walk down. We got to skip all the major tourist stuff tonight if we're ever going to make it to Hudson Yards. But you know what was a really, really good scoreless game today? The Mexico game. Mexico-Poland. My God, was that a good game. Now, I know it may sound crazy to say you got to go watch the highlights, of the Mexico-Poland game because it was a score of 0-0. But you got to watch those highlights. You have to. Eddie B, thank you so much for the $5 donation. You are very kind, and I appreciate your support and your kindness. Thank you. But the Mexican goalkeeper, Ochoa, talk about an unbelievable save. My God. Did you guys see that? So Poland had a penalty kick. And Ochoa makes one of the most ridiculous saves I've ever seen in my life. Yeah, GGNYC says Mexico's goalkeeper. Ochoa was incredible today. It was an unreal game, man. Unreal. It is insane. Hey, Dusty Cole, what's up? God bless. Alex, Spain-Costa Rica will be a great match. Is that tomorrow, Alex? Hey, Melissa 2087, good to see you. It says, hey Tom, what are you going to be your plans for Thanksgiving? Not too much, just hanging out with the family on the island. All right, what do we got for the Empire State Building tonight? Looking pretty good in the classic white. But Melissa 2087, what about you? Any big plans for Thanksgiving? You traveling? You hosting? Staying in? What are we doing? What do we got? Everybody, I just want to say, can we keep the religious conversations in the chat to a near minimum? So that would be right at about a 0. I appreciate it because it's just, we have an international audience and I understand you're religious. I respect it, but you know, it's gonna get everybody cranking here. Malcolm says, I hear the next World Cup is in the United States, Mexico, and Canada. I heard that too, and supposedly Miami is going to be hosting a couple games as well. Melissa 2087 says, no plans for Thanksgiving, just staying home. I usually go to the Macy's parade every year, but not this time. Oh, really? Interesting. Well, I think the Macy's Thanksgiving Day parade is going to set records this year for attendance. Because this is really the first year that I think the vast majority of people just want to go out and do something. All right, you're out of here. Brad's brain. I don't know what I'm gonna bring. August Ice says the World Cup should be every year. Zozo Bob's Tom, Miami's extending the Metro Rail to the Hard Rock Stadium for the World Cup. Wow. Now I know they were extending the Metro Mover to South Beach. I didn't know about the Metro Rail. That's actually really good news. Really, really good news. Sparks Carnival says, Tom, a pilot shortage is causing major headaches for travelers at regional airports. Yeah, I heard about that too, man. That's insane. So I think if you wanted to get a really, really stable job, if anybody's thinking about being a pilot, I think this is the time to do it, because we're at a very interesting time when a lot of pilots are up for retirement and there's just not enough new pilots in training to replace the ones that are going to retire. I think I read a Wall Street Journal article not too long ago that said specifically that this year is going to set records for pilots that are going to retire. Kind of crazy to think about. Jeff W. says, sorry, but Detroit Thanksgiving is better than New York City. You guys only have the parade, we have the trifecta. I'm doing all three Thursday, the Turkey Trot 10K, Thanksgiving Day Parade, and the Lions game. Hey, that sounds like a good day, my friend. That sounds awesome. Good luck on your 10K, by the way. Love that. Shout out to all of our viewers from Detroit. All right, last and final topic, everybody. We are crushing through the stream. We are on point. Now, I sort of wanted to do something interesting. Hey, caller and chat. Thank you so much for the $10 donation. You are very kind. This is Hot Chocolate Fun. Hello from Delaware. Thank you so much. I appreciate your support. And I definitely will be getting something hot to drink with that at the conclusion of the stream. So thank you for your donation and support. I appreciate it very, very much. As we come up to 42nd Street, the New York Public Library. So one of the things I wanted to talk about is the housing market specifically. And I think we could use stocks as a leading indicator to a point for housing. So as a quick review, and before we cross the street here, so 2 weeks ago we heard from the National Association of Realtors as they released their existing home sales data, and existing home sales fell for the 11th straight month. Okay, so for the 11th straight month. Now, this week we are going to hear from the Census Bureau as they release their new home sales. Okay, so brand new homes that are being built. So I've been noticing an interesting trend here because obviously, as we talk about on the live stream, interest rates are going up. Right? This time last year, you could get a 30-year fixed rate mortgage for right around 3%. Beautiful view of the Chrysler building here, by the way. Well, now interest rates have moved up nearly 100%. Okay? So the average 30-year fixed rate mortgage is going for about 7%, maybe a little bit higher than 7%. So I feel as if sometimes I always like to catch myself if I have too much of a negative or bearish bias, right? Because in the investment business, what can happen sometimes is if you have a specific bias or a trade direction or even an idea, right? Much of investing is about idea generation. You tend to associate with those who have a consensus view, such as yourself. So I wanted to spend some time maybe sort of counteracting or providing some data points that sort of goes against my argument, my bearish housing argument. Now, I'm not saying this is going to happen or it's not going to happen, but I think it's important to review that. So let's do that now. But first, check this out. We passed the New York Public Library yesterday, and the Lions here did not have the Christmas wreaths around them, but it looks like they just put them up today. So if you look across the street, they finally have the Christmas wreaths there. Pretty cool. Patience and fortitude. Maybe they were watching the live stream yesterday and they decided to put them up. But I want to turn everybody's attention to ticker symbol ITB. Okay, so if you go to tradingview.com or something like that, which is a very good charting software that I would recommend, it's free, and you go to ticker symbol ITB. Okay, that is the iShares US Home Construction ETF. Now, it is very, very heavily weighted towards some of the largest home builders here in the US That includes D.R. Horton, you know, all the main ones. Now, maybe if someone wants to help me out here, if you go to BlackRock's website, or you just do a quick Google search and you look at the top holdings in the iShares US Home and Construction ETF, ticker symbol ITB. Maybe if you want to list those particular stocks in the chat. I think the top one is D.R. Horton though. Anyway, so one of the things that I like to do is, as we know that stocks are a leading indicator, right? Stocks are a discounting mechanism into the future. It seems as if we may have just put in a higher low on this particular home building ETF. So maybe the market is forecasting to us here that this impending housing crisis is not going to be as bad as many people think, right? And if you really want to do a sector drill down, what you can do is you can look at the individual names like D.R. Horton, Toll Brothers, and look at the relative strength of those particular stocks. And you'll notice, I think today we closed at 59.40, right at the 200-week moving average. So if you look at a weekly time frame of this Homebuilder ETF, it looks like we're trying to form a little bit of a base here. We may have put in a lower high, and we are rallying quite strongly, by the way, off of the 200-week. Now, if you look at the lows, right, where we were trading at the exact low, this was all the way back in June, I think June 17th. I think we put in a low of $48.48. We did have that summer rally, then we had a correction, but now we're going back up again. So maybe this is a forward-looking indicator to say the futures market as it relates to Fed funds sees us topping out at around, you know, maybe 6%. So if we actually do top out at Fed funds, maybe about at 6%, the Federal Reserve does pivot sooner than expected, and interest rates start to come down again, maybe at the latter half of 2023. You know, maybe the market, being a forward-looking indicator, a leading indicator, is trying to tell us that. Now, again, I'm not saying that is what's going to happen. As you know, I have a bearish bias on the housing market, but it's important to look at the data for what it is. And there's only one thing that is right, okay? It's not Ray Dalio. It's not Stanley Druckenmiller. It's not me. It's not any individual. The only thing that is always right 100% of the time is the market. And sometimes the market will tell you something that's right under your nose that may disagree with your bias, but it's important to sort of put yourself into check and do some soul searching there. So I don't know. What do you guys think? Do you still think that we're going to go lower in a lot of these home builder stocks specifically? Or do you think that this could potentially be a bottom in this sector? Blues Raider says, Tom, I bought some 11th month T-bills at $4.75 today. Long-term treasuries are much lower. Street seems to be anticipating maybe one or two small Fed raises before pausing or easing. Yeah, I think you're correct. I think you're right. Now, the yield curve is extremely, extremely inverted. Hold on one second. Funky Monkey's 2023 real estate market. It's going to crash, no doubt about it. Is this Funky Monkey? Sorry about that. I'm just trying to I think we're getting a lot of spam in the chat tonight. Maybe I don't have the Nightbot engaged. Billy says, I just learned the other day why they are called bull or bear markets. August Ice says January indicators might be a better picture. Maybe. We'll have to keep tabs on it. All right, so now we are walking down 5th Avenue. We are about to be at 34th Street. Wow, so Brad's brain says, Tom, garage doors have been on months delays for 2 years. It's now easing back to normal 6 weeks. My point, I wonder if suppliers will drive housing market return. You know, it's interesting, and one of the other things I'm looking at is individual stocks like Home Depot too. Now, I think in that indice, or that ETF, excuse me, I think there is a very high weighting to Home Depot and Lowe's too. And sort of the theory there is if Home Depot and Lowe's are doing well, wow, that guy was going fast. The theory is if Home Depot and Lowe's are doing well, chances are the housing market is doing well, because usually you need to buy things at Home Depot to make home improvements, outdoor patio furniture, things like that. Rod Johnson's rates are taking the affordability for most Americans out of reach. Next year will be brutal. Yeah, you're right. And if you look at, one of the things that we've been covering is existing home sales data specifically. So to your point, this has been the 11th straight month of the existing home sales declines, according to the National Association of Realtors. Now, the interesting thing is this. Obviously, to your point, if you have a near 100% move in interest rates, where the average 30-year fixed rate mortgage is 7%, that pretty much prices about 50% of the people out of the market, right? Because if you budgeted for a $450,000 home at 3%, that math no longer works at 7%. But where I think things, and it's never appropriate to say it's different this time, because it never is. Really quick, I'll show you guys this beautiful view of the Empire. It seems as if inventories are not yet reflecting the environment that for prices to come down materially. And what I mean by that is, from the last report we saw from the National Association of Realtors, there was about 3.3 months worth of supply on the market. Now, economists in general have a consensus that says in order for there to be an equilibrium, right, to match buyers and sellers, there needs to be about 6 months worth of supply on the market. We're just not seeing that. We're not seeing that yet. And there could be a couple reasons for that. And I think it may have been Sparks Carnival, it may have been Joyce, I forget who pointed this out. If you bought a home over the past 8 years, chances are there's a pretty high probability that if you have a mortgage, right, if you have debt, your interest rate is probably below 5%. So when you have the Federal Reserve locking rates near zero for prolonged periods of time, this has been 14 years now, it's going to really, really distort the market, because if somebody's looking to sell now, chances are, even if they made money and they have a lot of equity in the house, if they go back into the market to try to buy a home, on an affordability standpoint, with 7% interest rates, they probably can still afford either the same amount of house that they bought, that the purchase price that they bought it for maybe 5 or 6 years ago, just based upon the debt, the interest rate. So I think a lot of people are choosing not to sell a lot of people are choosing not to sell and just sort of stay put. And I think that's why we're not seeing a lot of inventory flooding on the market. Now, another reason, if we sort of draw some similarities and conclusions from the 2008 financial crisis, one of the main reasons why we saw a mass flux of inventory hit the housing market in '08 is because of foreclosures, right? People were delinquent on paying their mortgages. They defaulted on the debt, and then those homes went into foreclosure, in which case they go back to the banks, they get auctioned off, all the whole cycle there. In this cycle leading up to 2021, 2022, where we are now, the underwriting standards are extremely, extremely healthy, or a lot better. So leading up to 2008, you had egregious underwriting practices and standards, no income verification, no credit check. It's not like that anymore. Very, very strict lending standards. So I think a lot of the buyers who bought over the past 14 years were a little bit more responsible and well capitalized. This is the Empire State Building right here, and this is the brand new Starbucks Reserve store, the Row Street here. And they also have a location at Chelsea Market. And it appears they already closed down 34th Street. Maybe we could actually see, once again, wow, this is a weird shot. How often do you see 34th Street completely empty with cars? Almost never. This almost looks like what it looked like during the pandemic, for those of you who were joining the live streams then. But I don't know. I think it's really interesting. It's a lot to think about. Hey, Natalie is here. Says hello, Tom and team. 10 on the Empire State Building. Good to see you, Natalie.
Good to see you, man. Happy holidays.
San Miguel, welcome. Brad's Brain says a lot of the issues we have in housing slowdowns are due to inability to get the inputs required, the cabinets, appliances, doors, lumber, etc. Wow, that's really good insight. Manny Explores is here. Says hello, Tom and everybody. Good to see you, Manny. Always a pleasure to have you here. So Brad's Brain, are you seeing a lot of that stuff? Well, I would assume this. Here's what I would assume, and let me know your thoughts. Is probably all of that due to the supply chain cogs, I should say. But the interesting thing is, it seems as if the supply chain is healing at a very encouraging rate. But I don't know. I guess you would know more than us. Got the FDNY. Jeff says also labor shortages are causing the housing shortage, potentially. Yeah, and I mean the cost of labor is extremely high too, like skilled labor, plumbers, electricians, HVAC people. Not only are they very, very scarce to find, very expensive. It's a good point. Rachel says Manhattan looks empty, although it's year end of the holiday season. It's not empty. They closed down 34th Street because they're getting ready for the Thanksgiving Day parade, so there's no cars allowed here. So once we get further into Midtown, like this road is blocked off, they may be doing their rehearsals here. So I think every night from 8 o'clock to midnight, they close down 34th Street leading up to the Macy's Thanksgiving Day parade because they have the rehearsals, which we actually got to see yesterday, by the way. Gabrielle says, Tom, what is the minimum wage in New York? I think $15 an hour in Manhattan, I think. Yeah, Mike C says those kids that were rehearsing last night were awesome as well. They were. They're fantastic. Dr. Longus says, Tom, has companies like BlackRock slowed down in buying real estate? So it's interesting you mentioned that. I think we got some news out of JP Morgan Chase that they've actually just acquired a large swath of single family rentals. So JP Morgan seems to be coming in here now, buying up a lot of single family homes to use as rentals. And again, this comes at a time when inventory is actually still pretty low. So a lot of people are upset about it. So this is a view of Macy's at Herald Square. This is the largest department store in the world. Now, here is what I will say, and I have some opinions about this, because individual home builders may be looking to offload a lot of their inventory. And what I mean by that is, as we've been rolling through Q3 earnings season, we've essentially gone down the list and done a deep dive into each individual company's earnings reports. And they're all pretty much saying the same thing, right? It's obvious because they're all in the same business, but higher interest rates are really, really killing demand here. So what may be happening in order to move inventory, these single family home builders, let's say if they're sitting on 300 unsold single family homes, well, they're not just going to go to the open retail market like being sold to me and you, right? That's not how it works. It'll usually be a big block sale, it's called, right? And it'll usually be sold for probably around, in this market, maybe like 60 to 75 cents on the dollar. They'll sell a big block order of 300 homes to a big private equity firm, right? Or like a big institutional investor. And they'll do either an all cash deal, or they'll have one of the big banks, finance the debt, and they'll use all of those single family homes as rentals for cash flow, right? And that trend that has been emerging has been getting people very upset on Main Street. Especially people who are first-time home buyers. So I think that's a trend we need to watch, and I wouldn't be surprised if we see some big record-breaking deals coming down the pike. But I think they're actually doing the rehearsal again tonight. This is cool. Maybe we could get a closer look. But once again, if you guys are enjoying the live stream so far, feel free to hit the like button and click the subscribe button if you're new, so you get notified when we go live 5 days a week at 8:30 p.m. Eastern from New York City and Miami. Grand Street One says, Tom, Amazon tried to buy the little corner building with the Macy's billboard shopping bag. I heard about that. What was up with that? So supposedly Macy's doesn't own the billboard, right? Do you know how that ended? How did that end? Did Amazon win that dispute? Hey, Kenny, says, me and my girl were just there. Hope you had a good time. All right, let's make a right at 34th Street. Yeah, Natalie, the Zoom though is not really good because we're only streaming in 1080p. Right, we can't stream in 4K, so it's not really that good, the Zoom. Hey, love is kind. Says, good night, everybody. Thank you so much for joining. Tahoe 814. This is those hot dogs good in those carts. I would advise against it. I have a story about it, but since the channel is grown now, I can't tell the story anymore. Oh wow, look at this. Let me know if you guys have a good view from up there. I'll watch the chat and see if it's good. Hey, business mail, good to see you. Yesterday there was a ton of people here. Let me see if I can go around and give you guys a better view. Yesterday was freezing for these guys to be out here. Oh, I think it's Lion King.
Till we find our place. We want to try to get our place by place. So ladies, you don't have to go, you don't need to follow the rider all the way. You just cut. You can cut over here, and I think you'll be able to make it in time. I don't think there'll be traffic in the way. Just let the rider keep going, and then you just cut.
Interesting. I think there may be a big Lion King theme this year. Yeah, they have all 34th Street closed down. Mike sees his Macy's parade needs to go more on the balloons and less on the show tunes. Well, I think tomorrow night, we actually may go up there. They will be blowing up the balloons for the Macy's Thanksgiving Day Parade on the Upper West Side of Manhattan. So they usually do that near the Museum of Natural History. So it should be pretty interesting. So you could think about like 80th Street to 85th Street. Yeah, Julia Emsley doesn't seem as impressive as it does on television. All right, I think we just may make it to the Hudson Yards tonight. We have a couple more blocks. So if you look straight ahead, we have 3 more avenues to go over, and then we will have reached the Hudson Yards. It's going to be interesting to see the vessel and everything lit up. Using people says, think Elizabeth Holmes got what she deserved with the 10-year sentence. I do think she got what she deserved. She defrauded a lot of people. And I think you're going to see similar events around the FTX scandal with Sam Bankman-Fried. I think you may see a life sentence there. And I sort of have a little bit of a sad take on that. Hold on, I'm going to debate in my head if I should say it or not. So all 34th Street is closed down. Check out this view of the Empire, though, from here. Oh, is that right? So in honor of the FIFA World Cup, there's going to be a soccer character. That's awesome. Love that. I'll be watching Team Canada tomorrow. All right, I'm going to... So as it relates to the Sam Bankman-Fried, the reason why I think you're going to see a very, very harsh sentence there is because you have a lot of institutional investors that lost a lot of money. I'll just put it that way. Without saying too much, I'll say that. Gabriel says, do you think crypto is a safe investment? Well, I mean, I've said it many times in my view what I think of cryptocurrencies in general. I think the vast majority of the alternative coins or the altcoins are classified as securities, right? Which means those people who are promoting these, I would say, tokens, are in violation of securities law, and that's not something I really want to be a part of. So I would stay away from all of the altcoins. That's sort of what I would say. Because if you listen to what Gary Gensler has said, right, and this is coming from somebody, I'm talking about myself, this is coming from somebody with very limited knowledge of securities law, but I know enough to interpret basic concepts. And these crypto tokens are securities, right? By definition. So if they're not regulated, and these actors, or I would say owners of these crypto companies, if they're not licensed to distribute or solicit securities, well, that's a big problem. So that's why I don't get involved in it. But Bitcoin is different in the classification of a security or not. So the SEC actually ruled and said that Bitcoin is property and not a security. So if I had to have exposure to any of it, it would probably lean towards that, if that makes sense. And that's sort of my view on it. All right, everybody, this building right here is the New Yorker Hotel. Now, an interesting thing about the New Yorker Hotel is that it's actually now, I would say, I think the top 6 or 7 floors is actually a dormitory for international students that are studying in New York. And that can include the City University of New York or the CUNY system, or really, I think any of the other schools in Manhattan or in the boroughs in New York City in general. And I think it may be on the top 10 floors. All right, so now we are at 8th Avenue. We are going to turn left and check out the Moynihan train station, which the front of it is actually still a post office. Maybe I'll take you guys on a quick walk through the Moynihan train station. So I haven't done that in a long, long time. Joan K, welcome. Yeah, using people, you know what's so sick about that whole Sam Bankman-Fried thing? Now, his parents were like compliance lawyers, and allegedly that it came out now that they were using customer deposits to buy real estate. I mean, that is just heartbreaking. I mean, people who had money on that exchange, knowing that your money went to buy luxury real estate for people, that's just nuts, man. Really, really disheartening stuff. Wow, check out this view of the Empire State Building here. Now, I think the one thing I also wanted to say about this FTX debacle is, and it may sound a little bit hypocritical here, but I'll sort of try to explain myself best I can. And what I mean by that is, I'm always talking about how cryptocurrency needs to be regulated, right? We always tend to talk about that on the live stream, but I don't think regulation would have made a difference in this instance. Would anybody agree with that or disagree with that? My view is that in this instance, regulation would have made no difference, and I'll tell you why. Because a fraud is a fraud, doesn't matter who it is. If you're going to take customer deposits and use them to speculate in the market and buy personal real estate, no regulation is going to prevent you from doing that. I mean, just look at Bernie Madoff. I think Bernie Madoff was the chairman of the freaking NASDAQ, wasn't he? Or the New York Stock Exchange, or I think it was the NASDAQ. So I think in these circumstances, you have nefarious actors that are just frauds. So in this instance, I really don't think regulation would have played a big part. Hey, Mothman is here. What's up? Good to see you. Wow, this is a really nice shot. You see Madison Square Garden with the Empire State Building. Using people says I would disagree because the SEC chose to overlook the fraud at FTX, even though they knew it. So you're saying there could have been, it's potentially Gary Gensler could have known about it and there was some inside job going on there. Now maybe you're right. I would accept that. I would accept that. There could be some corruption there. It's actually a good point. It's actually a really good point. All right, everybody, we got to use our inside voices. Check out the inside of the post office here. Now, the incredible thing is it blocks out all the noise of the city. It's almost strange. What do you guys think about the ceiling? I think we may start buffering here. Wow, Wayne McKay says Bernie Madoff was the chairman of the NASDAQ Stock Exchange in 1990, 1991. Yeah, I mean, it just goes to show you, if people want to be terrible people, they'll do it. Hey, Sherry Rodrigo, what's up? Good to see you. All right, now I need you guys in the chat to let me know if the internet is finicky here, because for some reason the internet is terrible in the Moynihan train station. Brian says no buffering. Mike C, so far so good. So this is where I come to go home. But here's the thing that's funny, right? You notice how all the tracks are listed here? So track 13, 14, 11, 12, 10, 9, 8, 7. Every time, without fail, I'm in the train station and they call my track and it's like, oh, track 20. Track 19 and 20 are the only two tracks that are not in this train station. So I can't even utilize this train station. I got to utilize the old one. I just thought that was funny. Hey, Tariq Khans, is this the same reason that it is quiet in there? They probably have free Wi-Fi. And also, I think it's pretty late at night, no? I think we started streaming late. Hey, Bill is here. What's up, Bill? Bill Rollins says, good evening. Good to see you, Bill. Thank you for joining us. We are inside the Moynihan train station. This is where I come to go home. Beautiful, beautiful station, but the internet is horrible. So unfortunately, I can't really give you guys too much of a tour, but I can give you this amazing view of the Empire State Building. Now this is a classic 10 out of 10 view here. Hey, Bree is here. Bree Grams, welcome. Says I have the rest of the week off, but I'll probably work. You should take some time to relax. Take some time to relax. Thanksgiving week. Watch the World Cup, hang out. Oh my God, treasure trove. Comment of the night here. So CME Group CEO Terry Duffy reacts to FTX collapse called Sam Bankman-Fried a fraud on national television. Dude, I forget which podcast was that. Yeah, so supposedly Sam Bankman-Fried had a meeting with the CME president, or with the CEO of the CME Group. And essentially he called him on his BS. And he said to Sam Bankman-Fried, he's like, look, I'm not a billionaire, but I can guarantee you I have more money than you. And he pretty much just called Sam Bankman-Fried out and called him a fraud. Now, why was that not released to the public before this whole thing went down? But does anybody know what the name of the podcast was? I'd love to shout him out and give him some credit here, but I just forget. You know, if you go to my Twitter handle, so if you follow @WalksWallStreet on Twitter, I think I actually retweeted it yesterday. Watch that interview, because essentially Sam Bankman-Fried wanted to compete with the CME Group, and the CEO of the CME Group, I guess, offered him what was it, like the valuation was like, what, a $32 million valuation of their crypto clearing department, and he wouldn't do it because Sam Bankman-Fried wanted to do things his way. And he's like, look, if we did the settlements your way, that would expose everybody to huge, huge risk. Bree Graham says Twitter is still going. Yeah, it's going stronger than ever too. All-time record highs in active daily users. Crazy. Sparks Carnival says, Tom, turkey prices have risen 50% in the last 2 years, largely due to production slowdown. Yeah, I think they're probably going to come out with that data. Sparks Carnival, but what do you think the average Thanksgiving meal is going to cost this year as related to maybe last year? The little guy Jerry says nobody cares about Sam Bankman-Fried except wealthy who lost some of their money. You know, I will say this. What's really, really egregious about this whole thing is that a lot of the, let's say, retail investors that lost money were not from the United States. They were from very, very poor countries in Africa. And if you look into it, FTX was doing a huge, huge push in these poor nations within Africa and essentially fleeced all of them. And it's so disgusting, it's so unethical. So even though your comment is true, right, a lot of wealthy investors did lose money. If you look at the vast majority of retail that lost money in this scam, it was from predominantly African countries. Yeah, Mike C's like, except for Tom Brady. Do you guys remember my main quote that I always say? Chances are, if a celebrity is endorsing an investment product, you should probably do the exact opposite. Okay, everybody, we finally made it to the Hudson Yards. We are going to see the vessel. And maybe, I think the mall may be closed now. Does anybody know what time it is? Can we do a quick time check? Because I think the mall may be closed. Hey, sunshine after rain. God bless. Thanks for being here. All right, so we're coming up to the Hudson Yards. I think we'll just do a quick recap of what we covered tonight on the stream. For those of you who are just joining, we ran through a lot. Tomorrow, obviously, is when we were going to hear from the minutes from the FOMC meeting. So we will hear the Fed minutes tomorrow. We talked about San Francisco Fed President Mary Daly that expects the Fed funds rate to peak at 5%. We also talked about a leading indicator in the home builders or the housing market, which is ticker symbol ITB, which is the iShares US Home Construction ETF. That seems to be making 52-week highs or higher highs. Then we talked about the XLE again, big day, big rally day for the XLE, up about 3.13%, closing at $93. And individual stocks like ExxonMobil closing at an all-time record high of 114, and crude is back in action at $81 a barrel. Maybe a little bit of a double bottom there in crude oil. We talked about Tesla starting its stage 4 decline. I think it is down now 60% from all-time record highs. And then we talked about hotel stocks such as Hyatt, Hilton, Marriott, and I think we forgot to talk about IBM. But IBM is also another one of these companies that is leading the market, and it comes with a dividend yield of 4.44%. So I think one of the best performing stocks this year, surprisingly, has been IBM. Hey, Joe C., good to see you. Hey, Lucky Rodriguez, I really want to visit the city one day. Please, that'd be fantastic. I think you'd really like it. But if you guys enjoyed the live stream so far tonight, feel free to leave a like on the video and hit the subscribe button if you're new. If you want to stay up to date on our financial conversations, you can scan the QR code on your screen and punch in your email. We do write a free investing newsletter where we talk about the U.S. equity markets, emerging markets, fixed income, the housing market, and the like. So please, if you want to stay up to date on that, you can scan the QR code and punch in your email. And we have finally made it to the Hudson Yards. Looking pretty good. Everything is lit up in the classic white. You also have the vessel here. Hey, Michael says, good to know for IBM. I work there. What do you do at IBM? So back in the day, I interviewed with IBM Watson's healthcare unit, but I think the IBM Watson healthcare unit was sold off to PwC. So I guess it's a good thing I didn't take the job. I probably would have got laid off. But you know what? I actually would be open to working for IBM again. Mainly in a sales-oriented position, like an enterprise account executive. Maybe. Yeah, Michael Joseph says IBM mainframes were everything, finally doing good again. Wow, Bria says my dad had an over 30-year career with IBM. That's awesome. Skyline 2020 says IBM has more patents than any other country. That is true. That is true. Hey, Malcolm says I'll definitely visit New York next year. I want to watch some baseball and gridiron. Love that. Matt M says, how old are you? 27. 27. Yeah, Greg says no code tools are where the money's at. Wow, they did a really good job here. Hey, Julia M says, gotta go. Thank you so much. Julia, thank you so much for watching. We'll see you tomorrow. Enjoy your night. This building right here is the Equinox Hotel. And I think the average rate, what did Blues Writers say? It's like $800 a night, something crazy. But team, we are coming up on the 2-hour mark, which means unfortunately we need to part ways and say goodbye, okay? And we need to come to terms with that. But the good news is I'll see everybody tomorrow, so no big deal. So wipe the tears from under your eyes, pull yourself up, have a good night. We will meet right back here in the greatest city on earth, New York, tomorrow at 8:30 p.m. So War Walker, thank you so much. Dr. Longest, FredX, Joseph Hardaway, all of our new people. We have a lot of new people in the chat, so thank you guys for subscribing to the channel. It's been fun. Wendy England 2 Explores videos. John Abdullah, thank you so much. Ed T, Josie, Lucrative, Using People, Dan Zhang, Gary Carpenter, Joan K, Outer Haven, GG NYC, Austin City Limits, Bree Grams, Zach Drew, Sunshine